Good morning. Welcome to Michell Consulting's series on tips and tricks for SAP Business One. Today we're going to discuss the landed cost process. A little bit about landed cost in SAP Business One. This is a functionality that allows a company to take additional costs such as freight, trucking, insurance, shipping, costs that are associated with bringing your merchandise to your store, and then taking these associated costs, distributing throughout the inventory, and increasing the value of the inventory. There's two methodologies in accounting for this. As I said, one, you can take the actual value of the inventory, and you can apply that against the balance sheet, the inventory value, and then the additional costs like the shipping expenses, trucking, insurance, all those expenses could be reflected on the P&L for your costs. Landed cost allows you to combine those costs into your inventory. This is value for a lot of our clients because the merchandise is coming from overseas, so there's a lot of additional costs, so it allows me to increase the last purchase price of the inventory, adding the value to the inventory, and in essence allowing me to then use that for commissions and gross profits and other calculations. A little bit about the setup. Let's go into SAP. Let's go to Administration. Setup, purchasing, and landed costs. So you can see here we decide our different types of landed costs. For purposes of this demonstration, I have insurance, shipping, storage, and inspection. The allocation method allows you to distribute in several different ways. And these are the defaults, which will be set up. When actually entering the landed cost, you can change these, but these will be the defaults. You can do cash value before any custom charges, or cash value after custom charges. You can do it based on quantity. So it's going to look at the quantity of the purchase order or purchase orders and distribute based on the quantity of the different line items. You can do it by the volume, the cubic volume that you have of the different items. You can also do it by weight, and you can also do it equally across the system. So again, typically things like maybe insurance would be based on the value of the merchandise. Things like shipping and trucking may be based on the volume. For example, a Rolex watch is worth more than a refrigerator, so you want to put the insurance value more on the watch. But the refrigerator weighs a lot more, so you may want to put the shipping onto that. So you can actually set this information up here in the system. And then you have the landed allocation cost account. Again, this is important. This is an accounts payable account. This is important for the when the actual invoice comes in. For example, we're going to get let's say we bought the merchandise from a vendor, and we brought it in, but then it was trucked in by a different vendor. So that trucking vendor is going to send you an invoice. We're going to take that invoice and we're going to distribute that to the inventory. By doing that, when I actually add the landed cost, I'm going to update my general ledger cost. Therefore, I need to post to my general ledger inventory account. So I'm going to debit my inventory account for that value, and then I'm going to offset it with a credit to this landed cost account. The reason why we do that is because eventually when you get the actual trucking bill, you're going to have to enter that into your accounts payable for that trucking company. Then when we enter the bill for payment, we're going to credit the accounts payable account, and the debit to the profit and loss shipping expense we would have done, we're going to credit the landed cost. In essence, we're going to wash out or zero out the landed cost. So this is the setup in the system. So let's go in here and let's start with a purchase order. A goods receipt I'm going to actually do. We're going to create a goods receipt, a simple one here. I'm going to show you some of the functionality that's coming through. So we're going to select our vendor. Let's do Acme Associates. And let's select some items. We're going to do a simple receiving. We're going to receive these three items, one of each. Now, let's look at the item for a minute, see where the information is coming from. If I go here and I open up the item, you can see that I have a last purchase price. So you can see I bought this at $549. That's the price that's actually on the purchase order. You can see on the purchasing tab, we have information here for the weights and the volumes. So you can see here we have the cubic volume and the weight. And again, within SAP, you can control this information default, so you can do it however you want to do it, like cubic inches, cubic feet, meters, and so on. You also have the same information on the sales side. That's where the information is coming from. Cancel this. You can see that on all the items. We're going to do a simple, let's add this. So we see that this is goods receipt number 280. So we're going to add it. Let's call it back up. So you can see here that we affected our accounting because we received it at this corresponding price. So if we look at our journal entry, you can see what we've done. We've debited the value of the inventory, and we credited a clearing account. Again, same principle later on when I actually get the invoice from this vendor and I enter the invoice through accounts payable, I'm going to credit my accounts payable, and I'm going to do an offsetting debit to clear out this goods received not invoiced account. But you can see the value here affected the inventory, that cost. And that's coming from here. This is the value of the inventory. So we've affected the value of inventory. Now we're going to get our additional expenses. So we've received our merchandise. What's going to happen now is the bills are going to start coming in, the shipping bills, the insurance. We want to take all these bills and we want to distribute it to increase this price. So we're going to go into landed costs. And we can see, again, a few things in the landed cost system. We're going to go and we're going to select our vendor, Acme Associates. And then down here, we have the option of doing copy from. Okay, we can do it from the goods receipt, which we're going to do first. We can actually do landed costs on top of landed costs. Some of our clients do this because they kind of create an estimated landed cost the first time to get it into the system, because it may take a while for all the original invoices and the bills from all the different corresponding vendors to come into the system. We don't want to wait. We want to do kind of an estimate based on historical data, and then we can actually do a landed cost on top of that to make our adjustments. We're going to select the goods receipt. I'm going to go down and grab that last here. So you can see we brought in the goods receipt number 280. You can see the 3 items here. You can see the corresponding weight and volume. Again, we can change this if we want. All this information is defaulting from the item file. We can see here our base price, the $549. We can see the expenditures we're going to add, and this is going to be the updated or landed cost right here. Okay, we have the ability of doing a projected or actual customs if we want. We can add our customs. We can have customs affect the inventory. Okay, this would be something that we don't want to have the bill. We just want to kind of distribute an additional cost. So let's go here into the cost, and we can see again insurance. This is coming from the defaults. We have the ability of changing this if we want. Let's go here and let's put a $100. Let's say $500 in shipping. Let's say do 100. Storage, and an additional 50. So you can see the factors. This is how it's being distributed. So what it's doing is taking this $100 and based on the value, taking the total value of these items, so it's adding this up, and it's doing a corresponding dividing it. So this is a certain percentage, this one, and so on. You can see weight. It's distributing by weight. It's also distributing by volume, and it's distributing by the corresponding inspection. So now if we go back to the item, we see some changes. If we look here, we see this value, and we see what the value is going to be. So we're going to take this amount of $800, and we're going to distribute it in a way that we're going to increase this price right here. And you can see what is actually being allocated. So if you look at the allocated costs, we're taking 273, and we're adding that to the last purchase price of 549 to come up with our new warehouse price. So this is just an allocation. This is just basically taking this information, and based on percentages, it's calculating and it's distributing across the board. You can see the vendors involved here. You can look at detailed information. Again, this is the warehouse price, and we can see here we're going off the last purchase price. And there's some general information. Let's do a simple one. Let's add this, and then we'll do something a little more complicated. So we're just going to go here, and we can see again, we're going to add it. Again, once we add it, it's permanent. So let's call it back up. So here it is. And if you look here, now let's go to the item. You can see the old was 549. The new is going to be 822. So we're going to open up the item. We're going to look at the last purchase price. And you can see the last purchase price is updated. So we've increased the value of our inventory. You can see the journal effect here. We created a journal entry with a specific code, an origin code for the landed cost, and you can see what we've done. We've debited our inventory value, we've increased our inventory value, and we've credited that landed cost account. Again, when these actual bills start coming in, so when the shipping bill for $500 comes in, and we have to enter that into accounts payable, for our shipping company, we're going to go ahead and we're going to credit accounts payable, but instead of debiting shipping expense, which would be something on your profit and loss statement, we're going to debit this landed cost, in essence, zero it out. Okay. We can also do multiple vendors. Let's do a new one here. So let's call up Acme Associates again, and we can do a copy from a goods receipt. Take this one here. And again, you can see some information. This one's missing some, so we're going to actually add weight and volume. Again, we need this for our calculations because we're using weight and volume. But we can go ahead here and we can say, you know what, we're dealing with actually these bills are from two shipments that came from two different vendors. So we have this vendor. We're going to go here. We're going to just delete this. We're going to tab again, and we're going to call up another vendor, Far East. It's going to ask you, do you want to delete the previous selected vendors? This is an important question. If I say yes, I'm going to lose my Acme Associates, and I'm going to replace it with the Far East Computers, which you may want to sometimes. In this case, we're going to say no because we want both vendors. So you can see here that we have different vendors. If we look at our vendors, we're having here. So we're using two purchase orders from two different vendors. You can add as many vendors as you want. And then again, the process is the same. Right? We look here, we just happen to have the same invoices on these, but if you had other items from the other vendor, the other items would be on here. The same principle. You would go in and put your cost. Same principle. You would see the two vendors that are involved. You'll see the detailed information. So if we go back, we can see that now we're taking here the 304, and we're updating it to this price. So we can go through this process with the two different landed costs. Let's just cancel this. Let's go back now and do a landed cost on a landed cost. So we're going to go back to our landed cost. We're going to select our vendor, Acme, and then I'm going to go here and I'm going to copy from landed cost. And you can see the landed cost I just did. The last one we did here was number 6. You can see that this one is number 7. So you can go ahead here and we can go ahead and enter it. So we're going to select number 6. Again, you have the information here. You see the new price. Again, if we look at this item, you have that price already updated. So here what we're going to do is we're going to go in here and we're going to change it. Let's say these were estimates and this one turned out to be 120. let's say the shipping was 400 and 100, and we're going to leave that. Again, our vendors involved, you can see our associated costs. You see how the cost changed here? It went down a little bit. So we're going to add this. Again, let's call it back up. Let's look at the effect. And you can see the effect was only 130. That's the difference of what I had. Remember, the original one was 800. Here was 800, but we made some changes. So it's affecting the net effect of the changes here. So in this case, we're actually crediting our inventory because we brought our inventory down. Because we actually did an estimate, we were a little bit too high. We realized it came in later. This is actually a valuable tool in SAP for that because, again, a lot of our clients, merchandise coming from overseas, Asia, Europe, it takes a while for all the bills, all the documentation, all the shipping, all the drayage to come in, and they don't really want to wait that long. They need to sell it, and as they're selling it, they need to affect their cost of goods, for commissions and gross profit. So what a lot of them do is they do it that way. And then what you can do is do an estimate, again, based on historical data, whatever you want to use, and then from that estimate, you can do a landed cost on a landed cost. So again, you can see the difference here in cost. We changed that. Remember, we changed it from the 150 to the 120. Okay, so there was our difference there of $30, and we changed this here from the 400, it's 500 to 400. So you can see again the changes, and that's how we were affecting the different amount. That information gets reflected on the system. Again, it's a valuable tool for that. You can look at your landed cost. You have all the historical data of the landed cost if you want to look at stuff. You want to see the factors of it. And again, it comes into play. And when we actually do get that bill, again, when we actually go and enter our accounts payable, we're going to go ahead and enter accounts payable. We're going to enter the information from the vendor. And instead of debiting our shipping expense or insurance expense, our profit and loss account, we're going to go ahead and we're going to actually debit the landed cost account. So it becomes like a liability account. So again, that is the landed cost in the system. We'll do a quick little recap. So again, under the setup, if we go to administration, setup, purchasing, and landed cost, again, we can define our different shipping methods or shipping types, as many as we want. We can determine the default allocation. So we're going to default by, again, quantity, weight, volume equally throughout the system, equally on the POs, or you can do it based on the cash value. Do it before a customs and after a customs. You have your associated landed cost account. Again, you can see this on our general ledger. And typically, this would be a liability account here. You can see we have a balance, so we know that these are landed costs that have come in, and we have not received the actual final invoices from the vendors. Okay, so that's the setup there. And then the actual landed cost module is here under purchase order. And again, what it allows me to do is select my vendor. Okay, again, I can put my corresponding information, my posting date, the date I want to affect it. I can go here and I can select if I'm going to take it from a, put a vendor in first. If I want to do a goods receipt, which is typically the beginning, okay, I want to go and select a goods receipt from this specific vendor, Acme Associates. Remember, I can take other goods receipts from other vendors and combine them. Maybe I got a shipment from China and I got a container with merchandise from three different vendors that I purchased, and they put it all in one container and shipped it over here. So I can go ahead and I can select my different vendors. Then once I do that, again, I would call up my landed cost. Just call up the last record. I'd call up my purchase order, and then here I would see all the items that are on that purchase order. I would go enter my cost here. Again, what I'm going to actually enter into the system. This just shows me the vendors that are affected. So if you look at the cost, on the items, you can see the base is the cost before I started this, and the warehouse cost is going to be the cost after. This is going to be the effect in general ledger. We're going to actually increase the cost of our items, so in essence, when we run our inventory valuation report, that cost will be reflected. Again, you have, and then general information shows you the actual transaction. Again, that concludes our session today on landed costs and SAP Business One. This will be available on our website. You can view it as many times as you like. Any questions? This time we're going to open up for questions. Okay, I don't see we have any questions. Okay, so we're going to conclude now. Once again, thank you very much for your time. And you can go to our website, join us at mitchellgroup.com, and you can view this presentation. Thank you.